The market is currently punishing Microsoft for spending money. Wall Street is suffering from short-term anxiety over Microsoft's projected $150 billion spend this year. The underlying earnings for Microsoft are continuing to be highly profitable while the stock price behaves like the business is in decline. In less than 10 minutes, I'll show you why Microsoft is a screaming buy. In the past, when this same situation has happened, Microsoft has gone on 50% plus runs shortly afterwards. Stay locked in for the next few minutes so you can fully understand this critical long-term correlation that presents us individual investors with great buying opportunities for the long term. Diving into Microsoft's chart showing the difference between profitability and the stock price. What we can see is there's been some key disconnects in the past, and during those disconnects, it presented a great opportunity for anyone who took advantage of this buying opportunity. If we look back to 2022, there was a disconnect that happened from the increase in profitability with the overall stock price. And what happened? Microsoft continued to execute fundamentally and increase profitability even though the stock price was going down. And what happened? Eventually, the market corrects itself and rewards the fundamentals of a business that's executing on their earnings. And we went from a low $200 price and we ripped up 50% in less than a year. Now, flash forward, we are in another time where we are becoming extremely disconnected from the profitability line, with stock price falling way below. And the main concern the market has is the spend going to hurt their future profitability? Well, we can see here that analysts are not projecting this actually to happen. We're actually going to see an increase in profitability over the next coming years. And this disconnect, in order for us to get better back aligned with the increase in profitability, this opportunity down at $400 presents us the opportunity for Microsoft over the next year or two to easily get back to 500 to 600 plus dollar range in order to align with their projected profitability. Now, if we hop into a famous quote by Peter Lynch, who's one of the greatest investors of our time. He, during an interview, famously said, I don't think people understand there's 100% correlation with what happens to a company's earnings over several years and what happens to the stock. What we're showing in that Microsoft chart is exactly what he's talking about here. When there's a disconnect in the stock price and company's earnings, this gives the individual investor a huge opportunity to load up on a great company at a discounted price prior to it recovering back to a more normalized stock price that will get an exponential return. And Peter Lynch didn't just say this to say this. There was a study done back in the day by Morgan Stanley that looked at over the long term, what were the main drivers of long term stock performance. And for us as individual investors, we're not focused on anything in the short term. All we care about is what's going to be the main drivers for long term stock price increases so we can have success over the long run. If you look at the short term, different things like the multiple of a stock has a lot bigger of an influence. But when you go out to 10 years, there's almost only increase in revenue and increase in profitability that matters for the long-term stock price. So as a long-term investor, this is great to know because then we can dial in our focus to the fundamentals of the business. So diving one last time back into the chart of Microsoft, we know now from the quote from Peter Lynch and the study from Morgan Stanley that over the long term, the main driver of the stock price is going to be increase in revenue and increase in profitability. Well, right here we can see that there's a huge disconnect between the stock price and the profitability, which presents us with a great opportunity to get huge returns over the next couple of years once the market decides to self correct and get the stock price back aligned with the profitability growth. Now, you might say, hey, in that study, they showed that revenue growth played a huge factor too. Is their revenue growth increasing, or, is their revenue growth starting to flatline and it's just that they're becoming more profitable, whether they're buying back shares or just increasing their margins? Well, let's go ahead and take a look at that. So if we're looking at revenue and net income over the past 10 years and even a couple years into the future with estimates, we can see that there's a clear uptrend for both revenue and profitability. So as we saw in the Morgan Stanley study, over the 10 years, these two numbers that matter the most, revenue growth and net income growth, what we're seeing with Microsoft is both are continuing to be executed very well by Microsoft, but we're seeing a disconnect. We're seeing the stock price continue to be pulled down by it, which this is great news as an individual investor. This gives you a great time to buy Microsoft for an outsized return over the coming years. All right, so that is all I had. Like I promised, under 10 minutes. I think we're closer to probably 7 minutes at this point. I hope you know that what drives the stock price long term is revenue growth and net income growth. And what we just saw is Microsoft is continuing to grow both of them, even amid the concerns of the increased spending. Even analysts going out future years are projecting both to continue to grow. And as we can see, the disconnect between profitability and the stock price, prior times when we've had a disconnect like we do today, the stock's gone on extremely good runs in the 12, 18-month future period following that. So now presents a great opportunity. I know myself, I'll be taking advantage of Microsoft down at these prices, and I'll be glad that I was buying now. Appreciate you watching this video. If you liked content like this, hit that like button, hit that subscribe button. Let me know down in the comments below, what stock do you want me to look at and see if there's a disconnect between their price and their revenue growth and profitability numbers, so I can bring you great content on what stocks you should be on the lookout for. Until then, I'll see you in the next one.